Who you get your personal consolidation loan through is very important because this can save you thousands of dollars and a lot of headache. But before we get into specific companies, you need to keep these 7 factors in mind. Number 1 is, what is the origination fee? See, the origination fee is a fee that lenders charge you when giving you a loan, and it's typically between 1 to 10%. And listen, this doesn't even include the interest rate, and most of the time it is deducted out of the loan beforehand. So for example, if the loan that you're getting is $25,000 and the lender is charging you a 5% origination fee, then you would actually only get $23,750. Then if you wanted $25,000, you would need to have asked the lender for more of a loan in that case. Let's say like $27,000, right? So in other cases, the origination fee would just be added to the total balance plus interest, but that's not as usual, okay? So ideally, you want to find a lender that has a low origination fee, or especially a no origination fee. Now that might depend on credit, which we'll talk about more later, but you don't want to be disappointed. You go and apply, you get approved, you're like, I got $25,000 coming my way, and then all of a sudden you see $23,750 hit your bank account. You're like, wait, what happened with the extra $1,250 that I was supposed to get? Well, that was an origination fee, okay? And if you had $25,000 in credit card debt that you were looking to pay off with that loan, and then you're left short, you're disappointed. I'm just trying to avoid that. So look into the origination fee to begin with. Number 2 is to make sure there's no prepayment penalties. Ideally, you want to pay off the loan early instead of going to full term. And if so, you would not want there to be any prepayment penalties. It's not the worst thing in the world if you go the full term because it's an installment loan, but it's always good to have that option to pay off in full. Let's say you had a $10,000 remaining balance and you're like, shoot, I just got my tax return, or I got a bonus, or I had a good month in my business, and I'm just going to pay off the remaining $10,000. It would suck to know, well, we're going to charge you a prepayment penalty of, let's say, $1,000 or $3,000. That would suck, right? So you want to avoid prepayment penalties as much as possible. Number 3 is a low interest rate. Now, this is common knowledge because, of course, we all want a loan with a low interest rate. Try to get an interest rate lower than the credit cards that you are trying to consolidate. And the last thing you want is a lender that is charging you ridiculous interest, because it would make no sense to transfer that high interest credit card debt into a high interest loan. See, you want a lender that can go as low as the market is right now, or just about as low. So of course, that will depend on how well your credit is at the time, and of course where the market's at that time, what's the Fed rates at. But at the end of the day, you want to, if the lowest interest rate is 9%, you want a lender that can go as low as 9%, not a lender that can go as low as 25%, right? That's just an example, but make sure that the interest rate is as low as possible. Also, it's good to compare. If you go to one lender, they might give you a 15% interest. You go to another, they'll give you a 13% interest. So you want to make sure you go with the one that has the lowest interest rate, of course, hoping that it meets all the other requirements as well. Number 4 is a soft pull to see if you qualify. Choose a lender that will see if you qualify for the loan without doing a hard inquiry on your credit. Of course, we'll never know 100% until we actually do the hard inquiry and apply. But look, it's 2024. You can get some type of pre-qualification, or even better would be a pre-approval. That way, if you go and do this hard pull, you have a 95% chance that you're actually going to get approved, or a high chance that you're going to get approved for that loan. The last thing you want is to try to compare loans, and you're going to each place and doing a hard pull, and at each loan, because this isn't a vehicle, this isn't a mortgage where you go and apply for a mortgage. Any hits on your credit for a mortgage within 30 days counts as one inquiry. This isn't that. This isn't an auto loan. This is a personal loan. So each time you run your credit, that's going to be a new hard inquiry, and that could really take a hit on your credit for quite a bit. If you're doing that, if you're doing like applying at 5-6 different lenders in a month. So you really want to avoid that. So the way to do so, see if you can get a soft pull with the lender before you actually go to do a hard pull. Number 5 is to make sure that the personal loan is unsecured. Listen, this is so important because you want a lender that if you don't pay, you don't have to worry about them taking your car, house, etc. Obviously, God forbid we don't pay, right? But things happen, life happens. Also, keep in mind that if you choose to go with a credit union, credit unions for a personal loan may get you a better interest rate. But if you have a vehicle or bank account with that same credit union, they typically do cross collateralization, meaning they can dip into any of these and use it to pay the monthly payment or even the balance. Meaning, if you didn't pay the personal loan with the credit union, then they can take the money that's in your bank account without your permission and use it to make a payment on the loan. Credit unions are notorious for this. And if they couldn't take the money out of the bank account, they can repo your car from you, even if it's considered an unsecured loan, simply because they do cross collateralization. A lot of the major banks like Chase will not actually do cross collateralization to the extent that credit unions do. So yeah, you don't have to really worry about that. If you're with like a bigger bank, you have a credit card, your bank account, you have a personal loan, and you defaulted on that personal loan, you really wouldn't have to worry about that. But with the credit union, you definitely have to worry about that. Number 6 is, what is the late fee and NSF fee? Things happen and sometimes we may be late on a payment or may get a payment kicked back. If so, what is the late fee and what's the NSF fee? NSF stands for non-sufficient funds, by the way. Now, there are certain lenders that do not charge late fees. So working with a lender with no late fees can save you a lot of money, especially in the long run. And number 7, how fast do you get the loan? Some loans can take a while to process and even have a complicated process, but there are lenders that can get your money to you as soon as the next day, which could be exactly what you need, and also have a very simplified process at that. Okay, and now for the part that you all have been waiting for, what lender do I recommend? I recommend SoFi Bank for a personal consolidation loan, and here's why. Number 1, no late fees. 2, low interest, I didn't say no, low interest. 3, no origination fee for borrowers with excellent credit. Yes, they will charge a fee for some clients, but it is possible to get low to no, even no origination fee. That's amazing. Number 4, with SoFi, you can see if you pre-qualify in less than a minute without running your credit. 5, the loan is truly unsecured. 6, you can get a loan as soon as the next day. And 7, they have a sleek mobile app to make everything easy. By the way, this is not a paid advertisement by SoFi. Now, it's important to remember when you're paying off credit card debt with a personal loan to be disciplined with the credit cards. I would recommend even to stop using the credit cards altogether in the meantime, just to avoid the temptation, because many people get themselves in big trouble when they start using their credit cards after getting a loan. If you ever spoke with someone and they had unusually high debt amount, like unsecured debt amount, this is 9 out of 10 times the reason why, because now you have the loan from the previous debt plus the new credit, plus those same credit cards are maxed out again, and now no one will approve you for anything because your debt is just completely maxed out. Your debt to income's maxed out, your credit utilization's maxed out again. It's just a mess. Listen, if you are interested in applying for a consolidation loan, go to the link in my profile and fill out the form to speak with me, and we will see if you pre-qualify for a variety of lenders, which does include SoFi. Okay, so that way you can weigh your options. I would recommend going to the link in my profile. Regardless of your credit score, there are alternative options, even if you aren't able to qualify. So make sure if you want to consolidate debt, you want help with your debt, go to the link in my profile today. Also, to learn more about debt consolidation, make sure you give me a follow. Talk to you soon.